Oh, I've got a good one. We talked about appraisals for a decent amount, and the one of the misconceptions surrounding appraisals is that appraisals have the ability to take into consideration future projects. So the conversation came up as one gentleman felt that the appraisals in a certain area always came back lower. So appraisals are really subjective. Appraisers are, it's an art form backed with a little bit of fact, right? So appraisals are bound to comparable sales in the area. Now, the quality of the home, the condition of it, is completely subjective. So if you take all of the metrics about a house and you put them on paper, it would be no difference than taking all of the metrics of a person, putting them on paper, and comparing, three people by the similarities in metrics, right? It is subjective. It is not by any means a foolproof way to compare properties, and it is not always right. So again, you have three appraisers and you'll come up with three different appraised values. They're subjective, not a foolproof method. However, they are based largely and only solely on comparable sales of homes that loosely fit the same metrics as the subject home and property. So there are no factors like if there's a plan to build a new development in an area, then that will never be reflected on an appraisal unless you have people that are speculating and paying more than they should for homes in that area. However, appraisals are always a lagging indicator of the market. So even if five properties are listed at 125,000, if none of them have yet sold and all of the previous sales on that same street or in that same area are around 50, then you're going to be really hard pressed to get any of those properties to sell or appraise for 125 until at least one of those closes. Now, there is just an unbelievable amount of money out there in the world. So, someone at some point in that example is going to make up the difference between what the bank will lend them, 75 if it's a rental property, or 95% if it is a owner occupied property of 50,000. So, somebody is going to really want that home and have to be able to borrow from friends, family, their 401k, or otherwise come up with the cash to split the difference or just buy the entire thing in cash. And once that first property closes for 125,000, well, now the others might appraise at the difference between that one for 125,000 and the other two that are still at 50,000. So now you're going to meet in the middle, and the other two are going to appraise for 75, 80, or something like that, right in the middle. So now it's going to become easier to get a better appraisal because you have the ability to use that first one that sold at 125, and then you're going to have to split the difference less of that 75 to 95% of that new value that's in the middle of 125,000 and 75,000 or 50,000, which is likely, 75, 80, 85, somewhere in there. So now somebody's only going to have to come up with like 30 grand, not the 80 that was initially intended on splitting the difference. So it takes appraisals a long time to catch up to the actual movements of the market. So, generally speaking, it is in everyone's best interest to not think that appraisers or appraisals have the ability to skew this data based on their own biases or any sort of like systemic issues that may or may not exist. I think that's a losing game because this is the institution that we have at hand. Changing it is not going to be easy, if ever possible. And at the end of the day, you have to point to the comparable sales. Now, if the condition is way off, then you're going to be able to. So, like if your subject property is recently rehabbed, so you think it's worth 100,000, and all the other properties are in horrible shape and they all appraised for like 40 grand, but they're complete dumps. And the appraiser tries to say that your property is worth 40 grand. Well, you can very easily dispute, contest. I don't think those are the words I was looking for, but those are the ones I'll use. You can argue, you can complain about that appraisal, dispute it, and try and get a different valuation. You can get a different appraiser out there. You can provide your own comps and say, this is the reason that I do not agree with this. And we have done that at times. Now, whether or not the bank will consider it is a completely different story. But if you're not satisfied with that, you can go to a bank, and eventually, just like you're going to be able to find a bank that is willing to work with you and help you become a better real estate investor by giving you more money, you're going to have to ask a lot of them, but you'll eventually find one. And same with the appraisals. I have found that because appraisals are so subjective, it is easy to kind of misplace or put a bunch of subjective kind of chip on your shoulder information and direct it to the appraisals. But I would refrain from doing that. I've kind of found that the more chips you have on your shoulder, the more it kind of weighs you down and the less successful you'll ultimately be. Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.